Accounting has always been called the language of business. But right now, that language is learning a whole new vocabulary, a vocabulary that's all about sustainability. So today, let's explore this absolutely massive shift in corporate reporting, how we're moving from a world that only cared about financials to one that really demands the full story. Okay, so here's our game plan for this explainer. We're going to start with the huge paradigm shift in how the market thinks. Then we'll dive into the global demand for this new kind of data. After that, we'll look at where companies are actually publishing this info and, just as important, how they're presenting it. And finally, we'll take a peek into the future to see where all of this is headed. So first up, let's talk about the tectonic shift happening in the market. Seriously, it's a fundamental move away from just chasing short-term profits and towards a much, much deeper understanding of what long-term success actually looks like. Which brings us to the central question, right? For decades, the answer was pretty simple: profit. But that's just not enough anymore. Today's investors, they're demanding way more than just the numbers on a balance sheet. They want to understand the whole story of how a company creates lasting value. Here's that shift in a nutshell. We're moving from a short-term sprint for quarterly earnings to more of a long-term marathon. The new way of thinking is that real value comes from stewardship, managing resources well, treating people right, and building a strategy that can actually last. It turns out that sustainable profits depend on sustaining everything else. So what's actually fueling this change? Well, it's not just some new philosophy. It's about some pretty powerful financial incentives. Let's look at the money behind the movement and why investors are suddenly demanding so much more. And this is not a niche movement. That number you see, that's $37 trillion in assets managed by a coalition of over 600 investors, all pushing for climate action. They see this as essential for their long-term financial health. And let's be honest, when $37 trillion talks, the market has no choice but to listen. And check this out. The demand for standardized data is practically universal. A global survey by EY found that a staggering 89% of institutional investors want this kind of reporting to be mandatory. So it's crystal clear. This isn't just a preference anymore. It's a core expectation. This information is now absolutely essential. All right, so we've covered the why. Now, let's get into the where. With all this demand, where are companies actually putting this information? Let's take a quick tour of the current disclosure landscape. Well, it turns out the information is kind of scattered all over the place. You might find some of it buried in official regulatory filings, like the 10K. Or you might find it in these big, dedicated annual sustainability reports. A really interesting trend is the integrated report, which weaves it all together. And some companies are even using these slick, interactive websites. For example, take a look at General Motors. They use an interactive web platform. And the big advantage here is accessibility. Instead of having to dig through some massive PDF, an investor can just click directly to the data they need. Plus, the info can be updated in real time. Now, in contrast, you have something like the European Investment Bank. They use a standalone report. This is a real deep dive document focused entirely on sustainability. It's a bit more traditional, sure, but it allows for a super detailed, focused presentation. It really just shows you how diverse this whole landscape is. And now let's look at an integrated report from TEPCO, a Japanese utility. Now, this is a key innovation because it directly connects sustainability performance, like, say, water management, to the company's bottom line and their overall strategy. It's not a separate thing, it's part of one unified story. And that's exactly what investors have been asking for. Okay, so we know where to look, but what does the information actually look like? This is where it gets complicated. The explosion of interest has led to this confusing maze of different standards, what a lot of people in the market call the alphabet soup. So let's see how we're moving from that confusion toward truly actionable data. This chart basically shows you that alphabet soup problem in action. You see pretty high adoption for different standards, like GRI and SASB, but no single standard dominates. It means companies are all using slightly different rulebooks, which makes it incredibly difficult for investors to compare performance, apples to apples, across their portfolios. And the results of everyone speaking a slightly different dialect? Well, communication breaks down. You get data that's inconsistent, it's hard to compare, and honestly, it's been a major roadblock for investors who want to use this information to make real decisions. So, what does good data look like? Let's go back to that TEPCO report. Here we see the what, hard quantitative numbers. Total water withdrawn, measured in cubic meters. Incidence of noncompliance, 0. This is the kind of specific, measurable data that an analyst can actually work with. But numbers alone don't tell the whole story, right? This is the why. TEPCO provides that narrative context. They explain their strategy for managing water risk, their efforts to reuse water. This qualitative info explains what the numbers actually mean. And really, this is the main takeaway. For information to be useful, you need both. You need the quantitative what, the hard data for analysis, and you need the qualitative why, the story that explains the numbers. When you put those two together, you get the complete, powerful picture that investors are looking for. All right, we've seen the demand, the landscape, and the challenges. So what's next? In our final section, we're going to look at the future of disclosure, and it's all about moving from that chaotic alphabet soup to a single global language for sustainability. You can really break this whole evolution down into 3 basic steps. First, investor demand for clear, comparable data just skyrocketed. Then in step 2, companies responded, but they used a ton of different standards, which created that fragmentation. And that brings us to today. Step 3, where there's this massive global push to finally consolidate everything into a single unified baseline. And right at the center of this whole consolidation effort is a new organization, the International Sustainability Standards Board, or ISSB. Their mission is both simple and, frankly, revolutionary. Create one global set of standards for sustainability disclosure. The whole goal is to finally end the fragmentation and create data that's comparable, reliable, and truly useful for everyone everywhere. And this leaves us with one final and I think crucial question. History shows that whenever we get clearer, standardized information, whether it's in finance or anything else, we make better decisions. So as we enter this new era of transparency for sustainability, the real question isn't just about the reporting. It's about what we are all going to do with this powerful new clarity to build a more resilient and sustainable world.